What do investors do with their money right now? Thoughts now from Chris Zaccarelli. He's Chief Investment Officer with Independent Advisor Alliance, which has $3 billion under management. Bruce Biddles is Chief Investment Strategist at Baird with $203 billion in client assets. Welcome to both of you. Chris, at this point, the stronger dollar would be a strain on multinationals, and we are seeing industrials lagging this market today. Treasury yields have gone down in sort of a safe haven play as well. Do you go with that trend at this point, or is it still too early? What do you think?
Well, I think, what's happening in Turkey is definitely a symptom of a larger problem in terms of the dollar getting stronger and weakness in EM. So at this point in time, I think it makes sense to take a look at what your options are. Small caps traditionally are a place that people will go domestic to try to avoid some of those currency issues in terms of the dollar headwinds. So, but the problems with small caps right now is that they're pretty expensive. They're about 26.4 times this year's earnings, whereas if you look at mid caps, which have a little bit more, resilience against the strong dollar than a large cap stock would, and they're priced around 18.4 times earnings. So I think if you go to mid caps, you get a little bit of the best of both worlds, a little bit better valuation, but also you get some of that respite from the stronger dollar.
I'm just curious when it comes to your view on how or if there is contagion from Turkey or even perhaps the trade wars. If you say stay away from banks, particularly European banks and for that matter, U.S. banks. I mean, interestingly, in today's trade, we are seeing U.S. banks among the weaker sectors, among the sectors that are lower.
Well, I'm not ready to say that what's happening in Turkey will be a contagion event and we're going to see that spill over everywhere. I would say it is a reason to be cautious. I do think you really do need to watch at what's happening with tariffs. I agree that China, being the second largest economy in the world, is going to be a much bigger event for all markets, including the U.S. market, and so that bears watching. I would just say over the next few months, you need to be a little bit more cautious. Eventually, we're going to get through these trade war concerns, and we're going to get through what's happening with tariffs, but I think we could be in for a bumpy ride in the short run, and for that reason, I'd be a little bit more cautious. Now, if you look through that and say the economy is doing really well, we just had a 4.1% GDP growth. We've got corporate profits doing fantastic, around 23.4% growth year over year for each quarter that we've seen so far in the markets. You've got a lot of positives, so I wouldn't necessarily be afraid of being long the U.S. market. And if anything, you might look for weakness in terms of within financials in the U.S. at least, which seem to have much less exposure to Turkey than, say, European financials. And so I think that's an opportunity to buy and look through it. But in the short run, I would be cautious. I think we have more volatility ahead, and I think Turkey is just one sign of that.